Welcome to a new update, and today we're going to do a fundamental video as we have been covering a few layer 1s previously. We've covered Cosmos, Solana, Avalanche, and today we're going to dive into one of the biggest projects that is within the Cosmos ecosystem. It's Terra Luna. So we're going to dive into that one, all the projects that are being built in the ecosystem and actually what Terra Luna consists of. So that's what we're covering in today's update. But before we're going to continue, do not forget to subscribe subscribe to the newsletter. There's also a 30% forever discount on the platform and the newsletter. Check out the Black Friday deal in the description beneath. And finally, do not forget to follow me on Twitter and Instagram, where you can find daily content on the markets. So now let's get into Terra Luna in this update and the fundamental video. Enjoy and have a wonderful day. So as discussed in the last project review, I've been discussing Cosmos and its ecosystem and highlighted a few of the major changes that Cosmos has been doing or that has been including, which is the Gravity DEX, the Gravity Bridge, IBC, and a few new projects. And one of the biggest projects within the Cosmos ecosystem is the one that you can see on the screen, which is Terra Luna. A smart contract platform with a focus on its algorithmic stablecoins, which we all know it's the UST, which is back to the US dollar. A little bit of background: Terra Luna was built by Terraform Labs, which was founded in 2018 by CEO Do Kwon. Terraform Labs is based in Southern Korea, the central party that builds on Terra Luna, and a number of projects within its ecosystem is merely temporary. Eventually, the plan is for Terraform Labs to step down and let the community get a bigger role in the development of the ecosystem, making it more decentralized. The architecture of Terra Luna is that it's using the Cosmos SDK and the Tenement consensus mechanism of Cosmos, which is its own implementation of delegated proof of stake. So Terra Luna is an application-specific standalone blockchain within the Cosmos ecosystem, and Luna has become one of the major players in the smart contract industry. As we know, the token has launched in 2019 and is currently the 13th largest cryptocurrency by market cap of around 18 billion, always depending on what for price action we get. The Terra protocol, within the Terra protocol there's one big central coin, which is the algorithmic stablecoin, which is known as the UST. We also know USDT and USDC or BUSD. Terra Luna uses USD, which is the algorithmic stablecoin. Other than fully backed stablecoins, there are no actual dollars backing it. Instead, it uses a combination of minting and burning Luna, as well as on-chain swap mechanism that acts as a market maker in order to maintain the $1 value of 1 USD through arbitrage in case it ever deviates from the $1 value. So in that case, it is quite elastic. We can see it here too, the market module and arbitrage. Minting 1 USD requires burning $1 worth of Luna, contracting the Luna supply and expanding the UST supply. Redeeming $1 Luna requires burning 1 USD, contracting the UST supply and expanding the Luna supply. This method applies to all Terra stablecoins. Besides the UST, Terra also has a Korean won stablecoin KRT, among others. KRT had been used a lot already when UST launched due to the partnership with Chai, an e-commerce wallet in South Korea. At launch, this had 2 million active users. Because of the way that stablecoins are minted on the Terra Luna blockchain, more demand for its stablecoins led to more demand for its government's token, Luna, as well. We've also known that Luna has been rallying up massively. This is a good token mechanic, as increasing usage of the ecosystem will also have a high chance of leading to a higher price for Luna, something which is very positive for the Luna holders, as their success is narrowly aligned with that of the overall ecosystem. On the other hand, should Terra stablecoin usage decrease, people will sell these for Luna, which has to be minted, putting pressure on the price of Luna. Same concept lies also with staking, as we all know. There has been doubt whether algorithmic stablecoins like UST could maintain the peg to $1. The data was mostly about whether when a peg is briefly lost, if the algorithm could make sure that this is regained. A lot of these algorithmic stablecoins have failed on this part, but Terra Luna has been doing quite well. UST has succeeded in regaining its peg, making people more confident about the stablecoin. Let's discuss a little bit about the projects that are on the Terra Luna ecosystem. Initially, pretty much nothing was built on it, but right now we can see a few cool projects, and I'm using one of them as well, which is called Anchor, a borrowing and savings protocol which gives users a relatively high stable annual yield of at 20%. Especially if you want to earn, you can just deposit UST here. API is 19%, so if you deposit, we cannot click it here, but if you deposit 10k, you can make about 1.9k here API with just a stable currency. Another one that's being used a lot with its recent dApps is Mirror Finance, which is a protocol that allows for the creation of synthetic assets such as stocks while offering participant extra incentives in the form of API returns. Mirror is fully backed by Terraform Labs as well. We can see all those stocks here too. But lately, development on Terra Luna has gone quite fast, with even more to come in the near future. A lot of this was set by the Columbus 5 mainnet upgrade at the end of September. So the Columbus 5 upgrade brought a few changes to Terra Luna, the most well known of which concerns the burning of Luna. Before, a portion of the Luna was not burned when UST was minted. Instead, it went to a community pool for incentives. We can see the way UST works on the screen as well. Now everything is currently burned with the Columbus 5 upgrade. This means that even more Luna will be burned as UST is minted. A bullish development for Luna as it leads to scarcity. Other improvements include improved scalability, higher staking rewards, and the activation of the IBC protocol from Cosmos, among other things. IBC allows tokens to be transferred between Cosmos blockchains, allowing for greater use of UST, leading to more demand and thus demand for Luna, which is burned to create UST. On the back of the Columbus 5 upgrade, a lot of Terra Luna projects were about to be released. Some of them already have been launched, and according to Terra Smart Stake, which is the page that we're currently seeing, over 100 projects are about to be launched on the Terra Luna blockchain, and we can see Anchor standing here as well. But multiple projects are being built, and that's something we have been seeing lately. Not only on Ethereum, but on many layer ones, we are seeing projects being developed. There are multiple bridges to Terra. The most well known are the native Terra bridge and Wormhole. The latter one brings some interesting features with it, therefore we decided to highlight this bridge a bit more. Wormhole helps users port over funds to various chains. What makes this bridge stand out from other bridges is that it gives access to liquidity across chains. It utilizes a consensus mechanism called Guardians to bridge resources over in a trustless and reliable manner. Furthermore, Wormhole V2 will bring the bridge to a higher level, as they will offer to transfer a wide variety of ERC20 tokens, NFTs, and has the option for insurance pools. Also, the bridge currently consists of 4 additional blockchains, as it has BSC, Ethereum, Polygon, and Solana, and Terra is obviously the one that is included here too. Well, a few of the stats. The stable coins that we can see here, the USD stablecoin is on place 4, which has been accelerated quite fast. DAI is quite an old one already. We also know USDC and USDT, but Terra USD is here standing too. Currently, it's about market cap 7.3 billion, all depending on how the markets are developing, of course. But the Terra Luna blockchain already has made a massive amount of TVL in smart contracts. It is ranked number 5 of chains with the highest TVL according to DeFi Llama, with a current total of around 10 billion. Currently, it's around 9.6 and the peak high was 12 billion. So, also, the amount of transaction volume in Terra is increasing heavily. We can see that from Genesis, the total transaction volume has been above 24 billion already, and we can see that during the 2021 year, it has been accelerating quite fast. And due to the fact that there are more transactions within the ecosystem, it will have an impact on the price, and that will have a bullish impact. However, recently we've had some extreme movements on the price action of Luna, which is because of the burn of 4.5 billion worth of Luna from the community pool. A total of 89 million Luna was to be burned in exchange for UST, through which the supply will be lowered significantly, and that has an impact on the price, of course. Coming to a slight conclusion before we're going to discuss a few of the projects that are interesting on the Terra Luna ecosystem that we are looking at right now. Terra Luna actually has come quite far in a relatively short period of time, and we can see that with Avalanche and Solana too. The adoption of its UST stablecoin has been stellar during the past year, which was driven highly for the growing interest in the DeFi industry. Despite this massive growth, a lot of this is still set to happen for the Terra Luna ecosystem. The recent implementation of IBC, the expanding ecosystem of Cosmos, the overall increasing interoperability between ecosystem, and the rapid growth of projects on Terra Luna are all bullish developments for the adoption of UST. This, combined with a better burning mechanism and more attractive yields for Luna stakers, will likely lead to a bullish sentiment for Luna. The one major risk is, of course, that UST loses its peg for a longer period of time, for whatever reason, since most is built around the Terra stablecoins. Now, when we're looking at the ecosystem of Terra, there's a few projects, and I'll discuss 3 at this point, which I think are quite interesting when it comes to this ecosystem. And we have been doing this with every platform or layer 1. First one is Prism. Prism is one of the upcoming projects to launch. It is a derivative protocol that allows users to manage the risk exposure of their yields. Prism enables users to split digital assets into yield and principal components, unleashing the next level of DeFi composability. Users can stake their Luna, for example, through the app and get 2 tokens in return, a principal token and a yield token. The base token has the current value of the stake token. But the yield token gives the right to all the future yield on the stake token, including airdrops, as a lot of projects on Terra Luna are about to go live. This opens the door to a lot of new possibilities. People will be able to buy and sell future yield, instantly locking in returns, or perhaps buying exposure to a yield that they expect to rise. They can hedge a currency exposure through this mechanism as well. They will also be able to use it in current different DeFi apps. It could be used as a backing for a loan, for example. Initially, the focus here will likely be on staking Luna and trading its principal and yield tokens on its marketplace. However, later this will likely be followed by other tokens as well. This could become a huge market, as it offers a solid new use case in an already significant market. Prism's team has a background in the interest rate and currency derivatives markets in traditional finance and are backed by Terraform Labs as well. The second one we want to discuss is Astroport. We can see the light paper here. Astroport is an AMM exchange that will soon go live on Terra Luna. There's currently one main exchange in this ecosystem, which is Terra Swap, which is quite basic in terms of its price curve. Astroport aims to significantly improve on this model. So what it will be doing is it gives users the option to use different pool types while also offering permissionless listing. It will be governed by the community. The available pool types will be as follows. We've got constant product pools made popular by Uniswap, stable swap invariant pools used for assets that rarely deviate from each other in prices like stablecoins, and we've got liquidity bootstrapping pools made popular by Balancer for fundraisers. If you want to learn more, you can just read the light paper on Astroport, of course. As there's currently no real sophisticated exchange on Luna, Astroport has a big opportunity to become the DeFi hub on Terra Luna. It has the backing of Terraforms as well. The final one is Mars Protocol, which is another project that is highly anticipated. It's a community-governed lending protocol. It is looking to provide both borrowing solutions and with collateral as well as uncollateralized borrowing for whitelisted smart contracts. It is incubated by DeFi Labs and IDO Collab Ventures 2. These uncollateralized loans will be approved by the governance and will include a credit limit to mitigate the protocol's risk exposure. Mars Protocol will be the first credit protocol to feature dynamic interest rates, meaning that rates will be adjusted based on changes in supply and demand to target a set optimal utilization ratio. Mars Protocol is also backed by Terraform Labs and as stated incubated by Delphi Labs too. So another fundamental review today. I hope you have enjoyed this one. I'll be back tomorrow with 2 fresh new market updates, and actually the live stream will be back tomorrow too. Have a wonderful Sunday and don't forget to check out our Black Friday deals. See you again soon.